So in October, the US non-farm payroll data, which is typically serves as a key economic indicator, left many surprised and fueled a significant surge in the price of gold price. And you know that in Friday trading session, after the non-farm payroll data for October, which is showing that US added 1,50,000 jobs. Right over here, you can see they added 1,50,000 jobs, which was below to the expected of 1,80,000. Um, This shortfall in job growth raised concern about the economy health. Additionally, you know that the unemployment rate also increased to 3.9% compared to the expectation of 3.8%, which also adding to worries about the overall economic outlook. And in response to the less than stellar economic data, we have seen that gold price jumped above 2000 during the data. And you also know that the release of the NFP always led to significant market turbulence, and we have seen that gold price circulated and traded near to 2000 level many times during the data time. So we have to watch 2000 and other important level that currently gold is falling, and we are going to discuss those levels for next week on different time frames. So we will start with the 4-hour time frame chart first, and I already shared this chart in Telegram channel. And if we check the 4-hour time frame on gold, you can see that currently gold price is supported technically and fundamentally. In technical terms, you can see that currently this trend line on 4-hour time frame is holding the chart, or you can say holding the price, and currently it is forming this structure in the higher side. This red trend line is currently acting as resistance, and in previous week we have seen that it faced resistance near to this level 2010. And if we check this, let me zoom in first. In a Friday trading session after the NFP numbers, price break above this previous resistance around 1990. This is a important price level that we have to look very carefully. The level of 1990. Previously, you can see the price rejected from this level right over here, and again after going down near to this support and this high volume area. This is low volume of course compared to this high volume area, but this, as we already in a good bullish move, as you can see previously we are in bullish move. So this area, this base area acted as support, and we have seen a good rejection of price from here, and gold price reversed under to this area. So after rejection to this, price again faced a resistance to this level over this region 1990 again, but finally break above, then rejected from this level. So again you can see it took support this level at 1990 and multiple times, and finally break down by this big candle, and again we have seen some decline, and gold price again took support over to this trend line. So after consolidating above this trend line for uh, this range, again price jumped back above to 1990. So for intraday and for next week, this level is our main concern, and we have to watch this level very carefully. And currently, as you can see, price closed above to 1990, and it is closed at 1992. So technically it is above to measure support on 4-hour time frame, and we can expect that if price able to break, then we can look for buy opportunities on 4-hour time frame. And overall, if price stay inside this, then on the breakout or on the breakdown, we can look for a sell opportunity if breakdown. But as the price is still in bullish phase on higher time frame and on 4-hour time frame, so for sell we have to wait it to break down, and on retest we can sell like this over to this level, because selling is still not favorable overall, because overall we have seen a good bullish run in previous month. Yes, we can expect some retracement, but overall we better look for the buy opportunities. So if price stays above 1992 or 1990, that is a previous week close, then we was going to look for buy opportunities. And for intraday, let me show you what are the levels and what are the aspects that we have to keep in mind. So for 1 hour, as you can see, for 1 hour, the price is closed. As you can see, it is closed below to next day CPR. So the next day CPR, that is central pivot range, is it is at this level. The highest is around 1994. You have to watch it carefully, and lower is at 1992. So for next week, if price stay below this, then we have to wait. Okay, and we have to wait till this candle low is safe, or for more safer side, we have to watch it to the low of Friday. Okay, it is around 1983. So if price stay under this level, then it is better not to trade in this sideways move, and we will wait it to break down the previous day low, then we can look for sell opportunities. But if price reversed back near to this range around 1995 and above to pivot range, then we are going to look for buy opportunities. And those who are looking for a safe entry, they can wait it to break above to this candle high, this body right over here, that is above 2000, and then we can look for buy opportunities. And our first target will be around 2010, around this level, and then we can target this level, this dotted line. Tell you, this dotted sorry, this dotted line is at 2045 level, 2045. Okay, so this level we have to, we can target a price break about to this high, because this is the weekly resistance as per the pivot placement on weekly basis. And for daily, what is the level that we have to watch? For daily, the previous day pivot average is at this high, is around 18986. So this yellow line, if price stays above this line, this is the pivot average. Wait, uh, if prices stay above this, then we better look for buy opportunities, because as you can see previously also, if price trade above to pivot average like this, you can see this yellow line, if price stays above this pivot line, this pivot average, then we better look for buy opportunities. So overall the scenarios are still in bull's favor, and we have to find a buy opportunity. Also, this gray dotted trend line, or this line, this dotted line, is the pivot on weekly time frame. So this is at 1990 that I already mentioned. This is an important price level. As you can see, previously we have seen rejection, breakdown, and rejection. So this is a important price level on intraday and on week. So above this, we are going to look for the buy. Okay, on intraday, we will wait it to break down at least this level. If you are looking for sell opportunities, which is currently not favorable, we have to wait a rejection from the higher level or let it break down this low. Okay, or this low. This is the Friday session low that I already mentioned. So this is the scenario on different time frame, that is 1 hour and 4 hour. And if we check the daily time frame, this is the daily time frame, and on daily time frame we have seen a wick formation after gold price rejected near to 2000 psychological level. This wick is a major concern on intraday for bulls, because this wick is not favorable for bulls and we can expect some retracement. Okay, but we are not going to sell till this low is safe. If it break down, then we can look for sell, and if higher side breakout, then we are going to look for the buy. Also on daily time frame, if we look at the Fibonacci's level, this is the major support. This is still safe, and we better look for buy above this. And if breakdown, then also we have to wait how price going to react on this level, and we better look for buy opportunities above this level. For sell, we can look for sell only at this level, or if we see a big rejection on weekly, which is let me show you on weekly. This is the weekly candle. So on weekly candlestick, you can see overall the price rejected from the lower side. Okay, so on higher time frame, it is still in the bull's favor. So we have to watch all these aspects, and then only we can look for sell opportunities under this. Otherwise, we better going to look for the buy opportunities, because overall the scenarios like fundamental, the Middle East war and other aspects is still in the bull's favor. Also, if we check the latest COT report for gold for the previous week, you can see that this time also, if we look at the positions of the managed money, this right over here, managed money, the smart players, and if we check the positions, change in position, they still adding into the longs. Previous week also they added into the longs, so they are building their long positions, and they added a good number, that is 17655 this time, and they still covering their short. So they decreased short by -1437 this time. So if we talk in terms of the sentiments of the COT, that is the money manager, managed money, it is favoring the bulls right now. So this is the data from the COT by money manager. And if we check the economic calendar for the next week, the most important data for next week is the Fed Chair Powell speech on Wednesday, and initial jobless claim on Thursday, and Friday also Fed Chair Powell speech. Wednesday and Friday we have to watch this data or speech carefully, then we can take trades accordingly. So we are going to discuss more about these datas and technical aspects in live trading session in live Telegram channel. So see you there. Thank you.